Guys, time to take a look at the markets a bit. As you can see, the London market is open for a couple of hours, and let's check the dashboard to see how prices are doing. Well, the euro dollar is in 133.42 after a better than expected IFO nevertheless, but the euro dollar has just been sold off as a result for whatever the reason. Looking at the euro Great pound after our analysis the other day, and price is targeting the 0.86 area. Remember, we are looking for something around 0.87 for our leg of a triangle to the upside to be completed. And like the name suggests, here on the US dollar Japanese yen, we are looking for this pair US dollar Japanese yen, as you can see, 96.69. We are looking for it to break lower, and the reason for that is that this contracting triangle, as you can see here, this is a daily chart, and this contracting triangle on the daily chart most likely will head lower, not only for the leg of a triangle, but for the whole triangle to break lower. Now, in order to come to sustain such a theory or such a probability or such a possibility, the move here is the move from the 97, as you can see, from the 75, sorry. So most likely this is the first wave, a second wave. Let me mark the end of the first wave here, and that should be around this level here. So the end of the first wave, 84.20, then a nice zigzag to the downside, only for the move to come for the third wave to the upside. From my point of view, this third wave to the upside is an impulsive move here with a double three running, and then with a strong impulsive move to the upside, and this to be the fourth wave. So from my point of view, this is a third wave of a higher degree. Let's mark this one as a third wave. Let's make it of a higher degree. Like this. Then the fourth wave, most likely to the downside, so this to be the fourth wave. And then we are looking for a five move structure to the upside, and then should be 1, 2, 3, 4, 5 in the form of this being called the terminal impulse. So the fifth wave to be right here, right now, a couple of days ago. Now, from this moment of time, this being the fifth wave, the whole structure here, 1, 2, 3, 5, will actually only be the end of the third. Let's make it third wave and of a higher degree. And because of that, that would make a second wave to end right here. And there you go. You have 1, 2, 3, 4, 5 structure to the upside. So one would be here. Okay, so 1, 2, and the third wave to be done here. Now, if the third wave is going to be done here, let's mark this end of third wave here, right here at 99, around 99.20 level. Let's change the color of this one so that we know that this is our end of third wave. Then we are looking at a 38.2 retracement for the fourth wave, and this 38.2 should come from the lows in the second wave here, and to the top, to the highs in the fourth wave. So you're not targeting the highs, the absolute highs here in the 10037 area, but you are targeting the 99.20 area here, as this being the end of the third wave. So 1, 2, 3, 4, 5 there for the third wave, and then we are looking for 38.2 retracement. Let me try to mark exactly the Fibonacci here, and 38.2 retracement for this wave comes in 90.79, so that would be 90.79 for the 38.2 retracement. And normally, it is normally for the fourth wave to come at least into the territory of the previous fourth wave. The territory of the previous fourth wave comes in 96.69, so that would be the minimum for this move to the downside. But I would say that the target should stay between 23.6 or 93.96 and 90.79. So that's why my call for this move to the downside, as the As the title of the analysis shows, my call is for a move into the 93. Again, let's try to look at the market. 97.71. You might have a stop loss at 92.20, and the target should be the 93 area, but quite aggressively into the 90 if everything goes well. Now, a typical move for a fourth wave. So let's assume that this is a fourth wave here, okay? A typical move into the fourth wave goes into the 38.2 level. Rarely the fourth wave travels beyond the 50% retracement, but it can happen. I don't know if this is the case here. We're about to see, but I would settle with this 90.79, 90, 91, even 92 retracement level, and then we'll take it from there. The structure that you are seeing here as being a contracting triangle, it is being called a terminal impulse. It is typical for fifth wave, and even in a terminal impulse, at least one wave needs to be extended. So this is 1, 2, 3, 4, 5. Five-wave structure for the fifth wave terminal impulse. Third wave sorry, the first wave is extended. That is 161.8 out of the third wave, and the third wave is not the shortest one. So there you go. This is our assessment. So what to look for next? Look for a corrective move to come into this area, something like this. Look for the triangle to be broken, then maybe retest it, and then another move to the downside that should come here. Now, in order to respect the principle of alternation between the corrective waves, so between the second and the fourth wave, they need to alternate in at least one way. The price, the distance price traveled, in frequency, severity, so on. So just measuring the time of the second wave and put it on at the beginning of the fourth wave here, and you'll need to have a different time. Then look at the structure, at the construction of the corrective wave, and normally they should alternate as well. Judging by the time taken for the second wave to consolidate here, I would say that the fourth wave would actually take a lower amount of time than the second wave, but that remains to be seen. Until next time, safe on the markets. Bye.